Good morning and welcome to the inaugural broadcast of Quasar Markets Pre-Market Prep. Most of you know me here. I am Howard Greenberg. Normally do the pre-market show with Big Beat. He'll be coming in at 9 a.m. We will still be going with that show. We're just going to give you a little bit of a different look here. It's 8:30 a.m. Eastern Time. In 60 minutes, the markets will open. And we're going to start to give you a little bit of a look at what traders do in the morning. Okay. So most retail traders might wake up at 9:25, roll out of bed, look at the top gainers list and start chasing candles. That's not the recipe that we take here on this show. Every weekday from 8:30 to 9, we're going to do things a little bit differently. I'm going to show you exactly what I look at as an analyst and trader. What do I do? What do professionals do to prepare? We aren't here to predict the future, but we are here to build a game plan. We're going to take a look at the macro trends. We're going to take a look at the data. We'll take a look at order flows, and we'll get you ready for when 9:30 hits. You aren't reacting, you're executing. So again, everybody, so excited about the change we have for you. This is going to be very interactive. Come on into the chat. Let me know what you're looking at this morning. Let me know what you'd like me to look at this morning. And everybody, like I said, we're going to start to get set. The first thing we're going to do every morning is we're going to take a check of the global temperature. We can't trade stocks in a vacuum. We'll take a look at the overseas markets. How did Tokyo, Europe, China, how did they treat the overnight session? If Europe is selling off hard, the US Open is likely to see sympathy selling, right? So we'll also take a look at dollars and rates. We'll show you the DXY, what's going on there, the 10-year Treasury yield every single morning. If yields are spiking, tech is going to feel the heat. We don't guess. We look at the bond market because the bond market is usually, and I will say usually because it hasn't been the case lately, the smartest person in the room. Geopolitics, whether it's trade talk, tariff threats, or central bank policy, will filter through the headlines. Most news, as you guys know, is noise. We'll tell you what 1% actually matters for your profit and loss statements. And once we get the environment set in, we'll take a look at the volatility drivers. Economic data. Do we have any CPI prints on tap? Is it Fridays with a job report coming out? At 8:30, the data hits the tape. We'll analyze the beat or the miss instantly to see if the market soft landing narrative is still intact. Earnings seasons. This is a perfect segue today. We are currently in the thick of earnings seasons. We'll look at the overnight and pre-market movers. Who beat on revenue but lowered guidance? Who's getting punished despite a beat? And who is gapping up on a big move? Commodities and crypto, whether it's gold hitting new highs or Bitcoin getting hit in the morning hours, we'll check the alternative assets. These are often the canaries in the coal mine for a broader risk market. Then we'll go into some of the charts. This is where the rubber meets the road, right? Every morning I'm going to give you my line in the sand for the S&P, the Nasdaq. Where do we see the institutional buy orders sitting? Where are the pain point for shorts? If it's a big expiry, we'll take a look at futures. We'll take a look at short interest. We'll identify the key levels where the trend is likely to change. I'm not going to give you 50 indicators, but we're going to take a look at price action, volume, and structure. If the price is above the level, we're bullish. If we're below it, we're cautious. It's that simple. And by 9 o'clock, you will have a complete map of your trading day. You'll know the whys, the whats, and most importantly, the wheres. This show is going to be about discipline. It's about professional grade preparation for the everyday trader. We've got a lot to get to today. The futures are moving. Gold is volatile, and we've got some major earnings to dissect. I know I've got my coffee here. Well, let me show it to you with my lovely Patriots logo. Yes, I am a New England Patriots fan, so very happy this morning. I also have about 14 inches of snow outside the door here in southwest Ohio. I hope everyone is staying warm, dry out there. Try to keep travel to a minimum today. Let those folks do their jobs with the plows and everything else. And, we'll have some fun. So let's start to take a look at it today. Like I said, one of the first things I do is take a look at this would be sort of my macro watch list here on the right-hand side of your screen. First thing I want to take a look at this morning is volatility. I look at volatility through the VIX index, the volatility S&P 500 index, and we do see it has spiked up a little bit here in the morning hours at about 16.73, but that's still very muted. Again, I consider anything under 18 to be neutral. Or I guess I should say anything under 18 is not very volatile. 18 sort of the zero in my book, but it is starting to pick up. So we'll see if that continues or not as we get into the morning hours. Taking a look at futures here. Well, first, actually, let's take a look overseas. So the Nikkei, the Japanese stock market, is down about 37 basis points, but we're going to talk a little bit more about what's going on with the yen, the Japanese bond market, and everything else there, because that is one of the key drivers we'll take a look at through the news today. And then if we take a look, Hong Kong, China continues to outperform most other markets of recent times here. The HSI, which is the Hang Seng Index in Hong Kong, up about 6 basis points today. And in Europe, it's pretty flat. We see not really much direction being given by the overnight markets overall. So that's not really giving us much there. From a rates, we do see it's rising here this morning on the short-term chart. But overall, rates are down from when we left on Friday. 10-year sitting at about 4.22, 30-year currently at about 4.81. And as I said, though, both are slightly rising here in the pre-market this morning. If we can keep rates down, especially if we can break back below that 4.2 today, that really gives risk assets more room to run. So let's see what happens there. Looking at the dollar index, again, it is bouncing back from the morning lows, but we are down at that 97.25 level. So King Dollar hasn't returned yet. We will have Steve Flanagan on at 9:15 this morning with Big Beat to go over everything in the Forex markets. But my early read is that not really a strong dollar setup so far today, although it is moving up throughout the morning. So maybe we've hit the lows. As we take a look at commodities, it's all about the metals, right? We're going to see that as we get into the early morning pumpers and laggards. The pumpers are really based extremely around gold and metal miners for sure. Gold hit a new all-time high again, 5111 $5,111, up 17.28% year to date, up almost 84% over the last year, and up 8.44% in the last week. So that debasement trade is still in effect. There is still a rush to get into gold. It hasn't subsided yet. We see a lot of analyst upgrades continue to come in across the miners, and we see, more and more folks calling for higher prices. To top that, as if you couldn't top gold, let's talk a little bit about silver. Up 6% here. Got as high as 110.87 overnight. Pulled back slightly, although I don't know how much of a pullback I would call this. And again, up 51% year to date, up 260% over the last year, and up 16% over the last week. You can't say anything about it. It just continues to run. The question is for how long. That will be one of the first questions I will have for Big Beat as soon as he comes in here in about 20 minutes. And oil continues to move down slightly, with Brent and WTI both moving back to the downside. Continuing, we'll call it a commodity. Let's stick with my neck of the woods, crypto. Bitcoin bouncing back nicely, a nice little recovery bounce here from the lows over the weekend. But again, this really is just a secondary relief bounce and still a descending market. 87,879 up 1.5%. Same thing with Ethereum, nice bounce back recovery over 2,900. But our problems here is 3,000's gone from solid support to now overhead resistance. So a little bit negative there also. Let's take a look at the Mag 7 next for direction here. And this has actually moved throughout the morning. NVIDIA was up most of the morning. Now it is down at lows of the pre-market. Well, not lows of the pre-market trading, but towards that direction. Trading now down about 65 basis points, 186.43. Apple up about 1.29% here, looking the best out of it. People seem to be happy with their pivot to using Gemini, Google's AI search engine, as their answer to their less than stellar performance by their AI products. Meta, one of the big ones to hit earnings here early in the week, up about 61 basis points. It's had a nice run the last 3 days here, again, leading into earnings, which will be a Wednesday. Tesla, who has earnings this week, also down about 1%. Netflix, who just came off of earnings, finally getting a little bit of recovery here. We'll get on Big Beat about that, find out if he's still in that trade, and go from there. As we look at the indices as a general or a bigger picture, right now, tech is the loser, as the NASDAQ down about 20 basis points. Fairly muted and not really much of a move over the morning hours. I will say a little bit of a descending trend line here, or at best a double top that sort of just formed on the short-term chart here. So not a huge great setup so far. For me, key would be breaking above 25,736 here on the NASDAQ to see that recovery start to actually happen. And very similar setup on the S&P, except I will point out here, trend line actually moving to the upside, right, most of the morning here. So that S&P looking, in my mind, a little bit stronger throughout the pre-market than the NASDAQ so far. And taking a look at the Dow Jones, flat so far. It really has been flat, flat, flat. We haven't really seen much here. We got one attempt around 818 to make a move to the upside, but outside of that, not really much movement across the Dow so far. Taking a look at the sectors of the S&P as they sit, I mentioned it, energy and mining is where all of the alpha seems to be so far this morning. and that's shown through XLE, the energy sector, up about 1.14%. Utility seeing a slight move to the green, and then materials again up about 80 basis points here. If we want to look at the laggards, again, XLK, which is technology, down about 12 basis points. Financials down about 13 basis points. Real estate also down slightly. So that's what we're looking at. And then also discretionary sector also getting hit here this morning. So those are the sectors of the S&P. If we start to look, let's first talk about what we've got coming up when it comes to the economic calendar. On the economic side today, we're going to have coming in about 34 minutes the New York Fed bill purchases. We'll have at 10:30 the Dallas Fed Manufacturing Index. And then the big news really is this 2-year note auction that will happen at about 1 o'clock this afternoon. That will give us a little bit of an insight into what bond traders are thinking this morning. So we'll definitely keep an eye on that. Earnings, huge week of earnings. Today we have 121 earnings on tap. You can see some of them are starting to roll in so far. Steel Dynamics, Dynex, but a bunch of them today. The Crane Company, and then aftermarket, we've got a few coming up. Not a big day today compared to what we have coming on tomorrow and the next few days. As I said, most of the Mag 7 is reporting this week, with Microsoft set for Wednesday, Google set for next week, I believe, next Wednesday, Apple set up for this Thursday, Amazon's next week also, Meta, as I mentioned, Wednesday also, Tesla Thursday, I think. No, Wednesday also. Netflix just went. So we've got a huge amount of the big earnings on tap here today that we'll keep an eye on for sure. And then if we start to look through the mornings, gainers and losers, so far, there's a new change to it since I've been looking. Most of them, as you can see, non-energy material sector or mining. USAR, the big move to the upside on news that the U.S. government is providing about a $1.5 billion backstop or line of credit to USAR. They were up as much as 30%, still up over 20% here. Sticking in the mining sector, HYMC, ALM, SSRM, PPTA, FCX, CRML, NEM, TMC, AUGO. You can see most of the early morning movers to the upside are in that area. We do see a couple of interesting ones here. CoreWeave has just moved into the early morning movers this morning. Data center energy play there. We do see utilities a little bit. ENLT, Enlight Renewable Energy, up in this morning about 2.83. When CoreWeave moves up, Core Scientific usually moves in tandem. If you don't know, they've signed a memorandum for CoreWeave to buy all of Core Scientific's energy. So that's why they're there. Applied Digital has a nice little move to the upside today. Also see analyst upgrade on Cisco came in overnight, has them up about 2.1%. So that's what we're seeing to the upside so far this morning. Looking for laggards. Defense sector, Kratos continues to fall to the downside, another 3.61% there. On the other side of the electronic technology, Enphase Energy down about 3.52. A lot of the AI names getting hit here today. A lot of the crypto adjacent names, MSTR down about 1.69%. Coinbase down 1.4%. As we can imagine, after the snowy weekend here, Thank you, Mr. Flanagan. Very excited for the new show. Very excited. Absolutely. Thank you, sir. So crypto adjacent names down on, and then with the weather, don't be surprised. Delta Airlines down about 1.35, Southwest 1.31, and American 1.23. So again, we do see that sector getting hit pretty hard today. Micron still getting hit here. This is a couple of days of pullback for them here. And then we do see a couple of the electronic, technology names getting hit here. So tech sector is still under pressure. Crypto adjacent names under pressure. Airlines under pressure so far. On the upside, gold, metals, mining. Those are the ones that are definitely leading the way there. And that's what we're seeing so far. Most of the news is still stuck on, are we on the sell America trade? Are we on the buy America trade? Which way is that going to move? AI infrastructure continues to be strong today, as we talked about. So we'll see that. Part of that CoreWeave move, I should mention, was talked about because of the NVIDIA partnership there, their expansion headline. So that continues to drive us to the upside. Trying to think if there's anything else I was really looking at personally so far. Those were really the big things there. It's all about watching the news this morning, seeing how things sort of translate across weather. Everything's really weather related today. You're not going to get a lot. The storms are in focus. What's happening, on the tariffs will definitely be the second key analysis to keep an eye on. And then it's earnings, and we'll see how they start to roll out this morning. There hasn't been a huge amount of them so far, but they'll continue to come across this morning. We'll keep an eye on those. What are you guys trading this morning? What are you looking at? Are you buying you buying this gold rush, or are you selling it at this point? At some point it has to cool off, but man, I don't know if I'd be a seller. I just don't think I'm a buyer at this point. I'm not chasing that trade, but I'm also not running to the running to the exits either. Again, I will say, we don't talk politics too much on the show, but everything going on in Minnesota definitely hitting the news today too. That's going to be a big part of it. Tensions there continue to increase, and it's more going to hit the rhetoric around Capitol Hill, where we're seeing folks on the Democratic side talking about how they are going to hold up any kind of support for DHS funding. So that's what we're going to have to keep an eye on, because that will affect the market. Again, it's not so much the politics, but how does the politics affect the markets for us? We saw, what's going to be interesting is we did see leaders of Minnesota-based companies, such as the incoming Target CEO, United Health CEO, and others come out and, call for an immediate de-escalation of tensions. I think we can all agree that's what we want. The other one we talked about, mega cap tech stocks are taking center stage. Meta, Microsoft, Tesla, and Apple all set to report quarterly earnings. It's particularly pivotal for Apple. We want to see how that works. What do they have to say about their partnership with NVIDIA? What do they have to say about their partnership with TSMC? What do they have to say about the partnership with Google, right? So that's going to be a big one I'm keeping my eyes on. We do also have some non-tech companies that matter this week. We got General Motors on tap. I'll be watching to say, do they take a huge write-off like we saw with Ford on their EV? They weren't as big into it as Ford had jumped in, so they might be in a little bit better of a situation there. And thank you, like always, Mike Shore, my partner in crime over at Prosper, for reposting the thread here. And Starbucks has earnings this week, so keeping an eye there. They're always a good gauge on the consumer discretionary. If you're still buying your $8 cup of coffees, first of all, good Lord, why? But second, it will be a good gauge of that. And then it's all about. I will say it was interesting, and I can't wait to get Big Beat and Steve Flanagan's views on this. It does look like Mark Carney is good at the taco trade, also, right? He said, it came out yesterday and said that the country has no intention now of inking a free trade deal with China, one day after President Trump threatened the 100% tariff on Canada if they did strike any deal with them. So Carney told reporters that Canada respects its obligations under the NAFTA deal with Canada, US, and Mexico, and won't pursue a deal with China without telling and including the other two parties. So I do think that was a positive for our local neighbors. So that's good to see there. What else do we have tomorrow? Keep in mind to keep a look at the earnings. UPS, General Motors, American Airlines, and Boeing all have earnings before the bell. I'll definitely be keeping an eye on Boeing's in full disclosure. That is part of my long-term holdings. We've talked about it on the show with Big Beat a bunch when it had taken the falls that it had nowhere to go but to the upside. But it is getting to that spot where it starts to get, the question is, does it remain a value? I do think it does right now. A big part of that is that they have more orders than they can fill, right? So that's a good sign. The new CEO, that transition seems to be going well, in my personal opinion there. So keeping an eye there, we'll keep an eye on what's going on. And then another thing I'm watching today, Costco is always a good harbinger of whether folks are in the defensive trade or not. And I'll be watching COST today to see if it breaks above that 989 level. Because if it does, to me, that really does signify the defensive trade is the way to be looking here today. We are getting set to get into the 9 o'clock hour, almost 30 minutes from the open. First look here this morning at the tick is slightly positive so far this morning. An advanced decline, slightly positive also, up about 265. As we're about a half hour from the open. Let's see if anything's jumped onto our early morning laggards. We do see a little bit of an improvement by Catos here. Do see PAX, P-A-X, Patria Investments moving to the downside now. That wasn't on the early morning laggards. Seeing continued stress across the AI as shown by Pony AI and some of the others. Intel still under pressure here now, down 1.93%. I mentioned Chinese names under a little bit of stress. Baidu down 1.86%. Bilibili down 1.83%. And then the weakness across transportations, especially when it comes to the airlines, UAL, AAL, Delta Airlines, Love, all down this morning. As for our leaders so far, USAR continues to be our number one leader, up about 20% here. CoreWeave strong on their partnership or their continued partnership with NVIDIA, up about 8.66%. And then we see the swath of metals and miners that come through from there. Seeing a little run by some of the beta names again, getting a little love today. So a little risk on here by NBIS, which had been beaten up. CORZ, which had been beaten up recently. So we are starting to see some of those get a little bit of a run. Same thing, Kiev, KYIV, which has really been getting hit lately, up about 2.6. We'll say positive on the tweet analysis. Pretty positive things out of Zelensky this morning there. Was very positive on a trilateral meeting. So love to see that. I do see the big man himself is getting ready to come into the room. Let's get his intro started here so we can get the show rocking and rolling this morning. You guys know who I'm bringing in.
When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, Big Beat on Wall Street. Let's filter the future live.
Good
Good.
morning, Big Beat. How are you doing today? And don't tell me it's 80 degrees. Don't make me cry.
It's only 65, and congratulations on the new show, Howard. I'm looking forward to seeing you in the mornings as everybody gets prepped for this, and we move forward. But congratulations on your New England Patriots. That was the
Thank
most
you,
boring
sir.
game I've ever seen in my life, I think.
It was like watching paint dry, wasn't it?
Yes, it was. But congratulations on going to the Super Bowl. It's crazy. It's
That's
crazy.
all that matters, right? That's all that matters.
All right, let's get to it. What you got on the docket for me?
Man, so, I'm going to ask you right off the bat, is Carney into the taco trade also now?
It's interesting. Over the weekend, I had a chance to go to Tampa a little bit and go visit with some friends, and not one person was talking about the economy. Not one person was talking about what was going on in the world. I think people are just bored of it at this point, right? I think people are just, okay, we get it. We have a crazy man, the president. He's trying to do everything he can. So I think people are just relaxing a little bit, and I think that's good. Obviously, the winter storm took over for a lot of people down here in Florida. We didn't really think much of it's 85. It was, sorry. But when we look at investing in the markets, this slowdown really gave people a chance to pause, a chance to turn on the heat. The natural gas prices going higher, and to really think about the future. And I think a lot of times we get that big pause. COVID was a good example of that, right? And right now they're starting to say, okay, well, what's really going on? And I think they started to watch Iran issues going bigger. U.S. Abraham Lincoln now moved in, and I saw all the different billboards in Tehran. Death to America. If you sow wind, you're going to get a whirlwind. It's if you reap the wind, you're going to get a whirlwind. It's interesting because I think people are just tired of it all, and so I think that's how we need to invest is thinking very seriously about it. And that's why you're seeing gold and silver pushing higher. And of course, the yen intervention now is happening. You heard that from Steve Flanagan over the last 3 weeks. So if you missed it, that's on you guys. He was very close and very tired, very tight on that. So here we are. So yeah, I think you're right, Howard. I think this is a different world we're looking at right now.
So the first thing, of course, we got to get into is the metals, Steve. I mean, don't stop, won't stop, when stop.
Nice, good.
But where are we going? Are we, to me, I said silver, this would be it, so to speak, that it would break 100, and may get to 110, but then reverse because of my experience with crypto. Do you think that's the case, or is this squeeze just
right.
keep going?
Well, I'm going to bring in my charts.
Okay.
And
Let me get my stuff out of the way.
Enough, I have been screaming about, charts. Why are there charts? And there we go. There we go. Why you've been screaming about silver for a while now, and I'm about to sneeze here. I don't do that normally.
Sorry about that.
But when I look at the markets in general, I don't always look at it when there's a narrative. Charts are usually the last thing you should look at, folks, when it comes to narratives. And in this case, the narrative here is kind of already pre-booked into the system, right? Meaning that we know that there's a dollar trade problem happening. We know that there's intervention going on. We know that there's war going on. Thank you, Zora. But let me show you what happens. And I don't know how else to explain this to people. Okay. I watched this trade over and over and over and over and over again. And the one thing that I noticed in this trade is it is really, really, really resembling the last 4 times it's happened. And you can see it back here in 2010 and 2011 during the crisis. And you can see here, this is a monthly chart. And you'll notice that it didn't stop until there was a big doji. And we've got the doji now. This is a monthly chart. Now I'm going to go back to a weekly chart so you'll see a little clearer. This is starting to slow down. So we are now nearing the very top. Now, I'm not about to call it top. I won't do that. I did it before on this, and I was right. And we nailed it here. And we nailed it there. And now we pushed up again. So is the top end? look, if you're looking at charts, we're so far out of our skis at this point. It's not even funny. You can see every time we got in the RSI, we're way out of our skis. But the charts on the RSI don't mean anything right now. So for me, I look, the path of least resistance is not to the upside. You can say it is, oh, we're going to 200, we're going to 5. I heard you this weekend. Someone said 5,000, and I said, oh, where? No, on silver.
Did they used to be part of the XRP army there? The same people calling for 100 on XRP.
We also heard the same thing on a we're going to 1 million on Bitcoin in 2025, right? This is not how it works, folks. You actually have to have people actually putting money in, and the money coming into silver is not buying physical. There is physical buying, but not at the rate of 109.44 now an ounce, right? It's right now at 84% is derivatives. That is going to come clean at some point, and when it does, it'll be the mother of all shorts. And I'm ready for it. I'm waiting on it, and I'm just going to sit here. I feel like as our friend Michael Lett, the big from The Big Short. He's that guy. Oh, it's going hard. But what do we do? I'm not scared, right? I'm really, really, really not scared. I know how this game plays out, and it's going to play out once again in our favor. And look, I'm short from about $100 an ounce. So that helps everybody out, which means to tell you that this is nuts, right? And look, yeah, I get it. It's 10% higher, and I'm in ZSL, and yeah, it sucks right now, but I'm not scared of this. I'm really not scared, because if you think about it, I'm going to pull up ZSL here. And yes, I know. Look at this. Look at the volume here.
Oh, yeah.
What does that mean? That's right. That's the 2-time reverse. That means that this buying here, this short, exactly, you got it. So that's going to have to come off. There's billions and billions of dollars going to come off in derivatives. And when it does, it's going to go in our favor. And I'll be sitting at the gate. I'll be the ticker taker once again. And you can see right here. So I'm not scared. I know where the price is. I'm not happy about it right now, but I'm not scared. And look, we know what happens when things go the other way and it goes fast. Remember, it's a percentage game in this situation. It's not an ouncy game here. It is a percentage game. So you gotta be very careful, because if it goes up like this, it could just drop very, very fast. And I think silver is what we got to watch. But it's got a reason to buy silver, because they need a bunch of cars. Well, we know that your cars aren't being sold as much. Oh, well, we need it for the future. We need it for phones. We need it for the.
And we do need it. We just what starts to happen is it doesn't get used as much into things at $110. You don't make coins.
There's been a big glut of it.
Yeah, you don't make a lot of different silver stuff. You won't see much silver necklaces and rings and things like that.
You know who's going to come out very well in this? The silver price of this? Not the United States, not China, Mexico. Mexico is laughing all the way to the bank. Scheinbaum is laughing all the way to the bank. She's like, "Well, we've got silver. We got a lot of it. You got off a cruise ship. You can't even look at it. Those silver stores are getting slammed right now." And guess what? You're going to be sitting on a bunch of silver in your house. You're going to look at it forever and go, I can't get rid of it for now. And it's going to sit in storage, and that's about it, which is fine. It's fine. Get those gun cases out. This is gun case silver at this point.
Yeah. Steve, I mentioned CoreWeave a little bit earlier. For those that know, they were at risk of, getting into some serious financial trouble. Doesn't look like that's the case anymore. NVIDIA announced it invested $2 billion in the AI infrastructure provider. Did an interesting way. They purchased common stock at $87.20 a share.
Right.
Not too bad of a move, because as soon as everyone hears that, what happens to the price?
Sky high.
Is this the new Berkshire Hathaway? These companies, or do we now look at that for the alpha?
It's interesting. It was one of my picks, right, for the year. CoreWeave, CRISPR, and Costco, the C's, I call it, right? I knew it was coming. I just didn't know who was going to do it. But when I tell people the story about Apple, and I say Apple went bankrupt not once, but twice, but 3 times. Right? Oh, no, that did it. No, Apple's been a big no, it really did. And I tell them the story because they forget, because history is very interesting. The person who saved them was Bill Gates.
Yeah.
Every time. And he never asked for payment back, by the way. But he got payment back. He went to help them. And because of that, Apple and Microsoft are 2 of the biggest companies on the planet. And he realized that. NVIDIA is not stupid. They realize they're going to need, and guess what? Owning that much shares, they're going to probably have a seat in that board at some point. right?
Oh,
And
yeah.
so all of a sudden you start to think about it. They're all getting into cahoots, and you're right. It could be creating their own ETF where the big players get bigger and they just buy up other small players and sit in their boards and make very favorable decisions for their own companies, right? So you're gonna see the same thing, I think, here. And if you were listening to me and playing with me, the same thing. Costco, look, it always goes up during bad weather. It goes up during bad times. It's a trifecta for them, I guess, right? And then you look at CRISPR Biotech. So the thesis here behind all that is that they need more quantum computing. They need more AI. They need all three of them do. So CoreWeave are in the middle of it, and NVIDIA is sitting at the king's seat going, well, guess what I have? I've got the chips that you need. So yeah, this is exactly the thesis behind this.
Steve, I'm going to go a different way from that because we now talked about where the money is coming from now, where it used to come from, getting hit pretty hard. Private credit fund run by the world's largest asset manager, getting hit in the pre-market today after revealing its net asset value will be marked down by nearly 1/5. BlackRock's TCP Capital Corp, which invests in the private credit of middle market companies, worth 100 to 1.5 billion, 100 million, 1.55 billion, has dropped 19% and has said that its net asset value for the fourth quarter will drop almost 20%. These the cracks you're looking for, Steve, in the market?
It's interesting on the 10-year now. I'm looking at it, and when you look at credit spreads, and you saw this from Michael Litt talking about it too, when you expand, you go buy, you need things, you need a house, whatever you need, you have to look at the credit, right? You got to look at the credit ratings. You got to look at all the fun things that you don't really think about until you really need it, right? And the place that really needs it, especially when you're building AI and you're building all this stuff out, they need money. These companies need massive amounts of money, and they're not going to get it from the stock market because the stock market's not their money anymore. Unless they sell shares in their company, they don't want to do that. Then that's to go to the credit market, the corporate credit market, right? And that's when I talk about the bond market, that's what I mean. And then sometimes I guess I kind of forgot that people don't really understand the bond market too much. That's the real bond market, right? The corporate credit spreads. And when you look at look at the fixed income, which is government bonds, 4.215. I thought we dropped the lowered the rates. I thought the Fed was was gonna. No, it's not the way it happened. And I'm sorry, you're not gonna be able to refi your house. And I've said this again.
Don't give me more bad news. First, you tell me it was 85 all weekend while I shoveled 14 inches of snow. Now God. I don't even get a better rate on my house.
Yeah, sorry, I can get worse if you want me to. But look, I'm looking at this in a specific way, and that specific way for me is the credit market. When you looked at 2008, when you looked at 2011, you looked at it was a credit crunch. It was people always look at it from, the market has crashed. Well, the market crashed for other reasons, and there was no access to liquidity. And guess what? If you're buying up all the silver, there's no liquidity. You start dumping all these treasuries around the world. We're seeing Sell America, and I know I'm looking forward to seeing Steve today on the show. You're back in the same boat. So Sell America is kind of it's actually happening, and it's happening faster than we think it is. And I think that's why there's a rush to buy metal right now. So, which is silly. It's not the best because you can't do anything with it. It just sits in your house, or it's derivatives. And if it's derivatives, we know it'll come right back down. It'll come crashing back down to earth. So people that are holding gold and silver, you're going to be holding your gold and silver for a very, 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 very long time. And that's good. And you're feeling comfortable with it in your house. But it's going to sit in your gun case, and you'll probably never see it. It's pretty, and you'll never be able to get rid of it. If you do, you'll have to do it at a lower price. Oh, well, I've been owning silver or gold since XYZ price. And those people are going to be okay because they can sell their one coin off at a time. But if you're buying silver and gold right now, it's because you have money, and you're not going to need it down the road unless you're stupid about your money and you don't know how to invest. That's a different situation. But yeah. All right, let's get to it.
Okay. Well, we are about 15 minutes from the open here right now. We see the advanced decline at 450 to the upside. So getting towards, it's moving up, slowly ticking to the upside here. Like I just said, Looking at the Qs, moving a little bit to the upside also. S&P's gone positive here by the SPY, up about 10 basis points here. Steve, what do you think we're going to see here this morning?
As I just said earlier this morning, I think people went over the weekend. We're going, you know what? It's really not that big of a deal. There's more important things like my family. There's more important things like other things. So, and I think they're starting to see that a little bit clearer, right? So, no, for me, I'm not too concerned about it. I don't like this market up here. It's a little frothy for me. I think I'll show my screen again here. You can see here, this is the daily chart, and I'll just draw the line. I'm making it easy for everybody to see it. There it is. It seems to be tied up here. There's no breakouts, and we know that. And if I pull up a 1 hour chart, make it even tighter, you'll see, there we go. So can we push up a little bit higher? Yes. And then I think there'll be some, it's really got to be able to push, but yeah. All right.
Well, Steve, I'm going to take off here. I will see all of you at Quasar here tomorrow morning at 8:30. And I know Mr. Flanagan's on the way. I'll be watching to see what you guys have to say to each other. Have a great day, everybody.
All right, folks. Okay, let's get to it. I think everybody wants to know what's going on in the world, so let's really got to get to it. I think the first thing that I really want to look at here is dollar yen. Obviously, the sell-off here in the dollar yen. We saw this. Look, the last few times we saw this in the markets, obviously was it not good time for the United States, and it was sell America then too as well, and we're seeing it now once again. The yen intervention, as well as the bond market. So. I think the president really needs to take a good look at what's happening here. Because if I were to pull this back and I were to show you the times that has happened, 158, 159 was here, right? This was in January of last year. And then it got all the way down to the 140s. So there was a sticky point there too as well. And then looking into it, yeah. And then continuing to push down here. You saw it once again up here, back, and I'll pull it up so everybody can see it. Same thing happened back in July. So, yeah. Okay. And the stickiness of the dollar yen here is really kind of showing. So if I were to pull up a weekly chart here, there we go. And Mark Benioff looks like looks like 2015 here was when that sell, and that's when the Japanese. So if I were to go back and show you, and for those of you that are older, when the Japanese started flooding the United States with cars, the yen was very expensive, right? And the dollar was very cheap, and that's why the Japanese started moving into us. I'm going to pull Steve Flanagan in right now. Steve, this is your trade, my man. You were spot on that the dollar would go underneath on the yen. So I'm going to pull out of this and begin to talk to us about it.
Well, Steve, you had two key statements last week. One was Ministry of Finance, Katayama, and I used those words. She came out with the G7 talk. Recent moves are excessive and do not reflect fundamentals.
Yeah.
But the bigger news was Bank of Japan, Ueda, when he said it's time to start focusing on the yen. Those were big comments. But we must look at this in a broad context. You're talking historic, Steve. And back in history, when I started trading dollar yen, it was over 300.
Right, right. What I'm saying, I think there's a time when the Japan was flooding the United States with Japanese cars, right? And we looked at Japan as we wanted cheap dollars so they would buy our products. But the problem now is it's the other way around, right?
Yeah, that's kind of right. I just wanted to. Right now, you had a knee-jerk reaction to this Friday chatter that the Fed called up banks and asked for what's a level dollar yen, and everybody said, "Oh, they don't do that. They usually will do that on a daily basis as part of their informative where our currency's trading." But apparently this one kind of, they wanted, and they will direct banks, to, it's okay to talk about it.
It's interesting because we look at the Fed, we talk about the Fed, they have a specific time when they have set meetings.
Right.
And when they get out of that norm,
That's right.
things get out of whack. And I think that's what you're saying, right? That for them to call the banks and say, okay, we might have a problem. Well, the first thing the banks will be like, what? Okay, we can get you out of it, but what? You're going to pay up for it, right? And so they're paying up for it.
Yeah, and I want to make sure for the viewers, it's a seat I sat in for 40 plus years. So understand the Fed does not direct intervention in the United States.
That's right.
It is the Treasury Department that authorizes the Fed to then go to its counterparty banks and execute. So it's a very important distinction. But the point I'd like to connect is the Bank of Japan and the Ministry of Finance comments last week, then the Fed checking levels. Yes, connect the dots. There could have been some, an interesting scenario there. But remember, the yen is weak for a reason. It's not as if everybody.
What's the reason?
The reason is Japan's fundamentals are not so good. Interest rates are at the highest they've been in over 20 years at 0.75. It is still a low interest rate currency. Now, what Japan is worried about is as the dollar appreciates, moves up towards 160 and maybe beyond, that they import inflation. Inflation is running fairly low, but they want it to stay down because Japan is a much more closed type of economy than the rest of the world would have examples of. So it's something to watch. I actually went long on the open in Asia because I'm long dollars against the yen because I think anything below 154 is a screaming buy right now until I see the Bank of Japan enter the market, in which case you'll see a sharp move. But I think we'll trade perhaps in a 152, 157, 153, 158 range for a period of time. Definitely, if you get up beyond 158, and this was my talk all last week, it is a danger zone because if they come in, you now see a 5 big figure drop in the dollar yen, and you won't be able to get out because the prices move so fast in the electronic space. Keep in mind, the foreign currency market is the most electronified of all of the financial markets.
Yeah, and I'm for those of you who don't know what I'm doing, I'm adding Fibonacci to the. So he's saying right here, so you're looking at a target here, huh?
Steve, I think, you could see a 153, but fundamentals will not support a ongoing strengthening of the yen at this moment.
So what Steve is saying here is that if you bought the yen now against the dollar yen here, then 153 is where your stop is. So he's saying if anything down here below it is where you put your stop in. And he's looking for an upswing here too. And I think you're right. This like Elliott Wave is also saying the upside to 154.71 here, somewhere around there, right?
Yeah, I would think right now a fair value would be around the mid 155 zone.
Okay.
I always look for a 2/3 retracement. The sharpness of what we have right now, the currency markets flinched on the open in Asia today. And so most of the dollar currencies have gaps now. If you look at the dollar yen, 97.46 was the close on Friday. And, your open today was 97.33. If I look at dollar yen right now, we're 153, just below 154. The markets, of course, reacting to this news that is the Fed the Fed is not involved in dictating the dollar policy. So was the Fed authorized by the Treasury Department to go and make a splash by saying, what is dollar yen? and a bank says dollar yen is at that time 156, 70, 72. Okay, and then everybody goes, why are they asking me on a Friday afternoon?
Right.
And the market tumbles down. But
Right.
the move that I would say has happened. Now, if you don't see Bank of Japan intervening, and I doubt they would intervene at these levels because, you're already 5 big figures off the high. So,
but what about the people who say that, and I know you're going to hate this, but I'm going to say it anyway, it's the Sell America the narrative that's coming out. I mean, and look, I know you don't like it, but it's happening. It's happening pretty fast right now, faster than I've ever seen it before. Treasuries are being dumped by major countries here at the fastest rate in history. Germany has the least amount of U.S. bonds in history, at least since World War II, I should say. It's getting worse and worse. I mean, that's why you're seeing what you're seeing here in the market. So when does the Sell America narrative go away?
Okay, well, first, I think the Sell America narrative is hogwash.
Okay.
I don't think there's any fundamental facts that would back that up.
But it is happening.
They are selling the tick data, which is the data,
Okay.
showed that foreign holdings in the United States hit the highest level ever.
Yeah, that's true.
Therefore, I would expect perhaps on the Greenland news, when he came out and said we're going to invade. Okay, I would expect some Europeans to be a little bit, twisted right now. And so some selling may be happening. But we're coming off of historic highs of foreign ownership in the U.S. That's one. Two, when I look at my career, Steve, if I go back to 2008, the dollar index was 71.80.
Yeah.
In 2011, it was 71.64. And even if I go back into the 90s, 1995, it was 84.80. So when people talk to me about selling America when it's at 97, I'm like, what are you talking about?
Right. I get that.
Okay,
Yeah.
so I want to keep it in a broad context. Yes, hedging, meaning you buy $10 of a stock in America and you say, I'm not so sure about their debt situation, the politics, the influence on the Fed. So I'm going to go in the foreign exchange market and put a 50% hedge and sell $5. That's the way the markets work. So yes, markets people are hedging themselves against the US dollar risk. You also look at gold and silver.
Right.
There's no question, if we go back in a year, 2, 3 years, foreign central banks have been the largest buyers of gold and silver. So one has to ask why.
I have to ask why. I mean, I think silver at 110 is absolutely asinine.
Yeah.
But that's my opinion. Obviously I backed it up with cash and money. The derivatives off of this is now at 87%. 87% of silver now is backed by a derivative and not by physical. So there's a problem here. What am I missing here, Steve?
Well, fiat currency, which is free floating currencies, and for the viewers, currencies have only started to freely float since 1971. Okay, so a lot of people would say, a long time ago, but really, in the scheme of things, that's not a long time ago. And before that, we were backed by gold. You could take $1 and get gold or silver certificates, gold notes.
Right.
So right now, I think that there's a worldwide problem. And Steve, I've highlighted this a couple of times, but let me just reiterate. Global debt in the world is just growing and growing. And it is something, if you look at former top guys in the market, they are highlighting this today. And people are saying, look, I've got enough US debt, I've got enough British debt, Europe debt, not necessarily Europe debt, but Japanese debt. Yeah. I could paper an entire house with it. And so when everybody wants more, if you want me to buy more, one, I need a higher interest rate, or
right.
two, I don't really want to buy. I own enough. what is another investment? Well, a year ago, everybody was crypto. You got to be long crypto. But now that's run into some, problems where people are now questioning its longevity. And so gold and silver now have taken up that space right now as the offset. I think your markets are opening
We
right
are
now.
open right now, and I got the silver trade up right now. Looks like there's a little bit of profit taking here on the stocks side of that. And there's your Qs chart right now. A little bit of heavy selling here in the open on the Qs. We have that we are positive by a little bit. Nope, we just went negative here on the day. So looking at that, 109.57 now in silver. So not quite. Yeah, we're still seeing more selling here in the Qs. That's a pretty straight shot there. I want to pull up a 10-second chart for everybody. There you go. Could be a lot of profit taking there a little bit. 109.62 now here on silver. Not moving too much here. Bitcoin 87.5. It's had been up as much as 88,000, but another 500 off there as well. But it dipped down in the early morning sessions. Tesla now getting hit once again, down 1.36%. We saw where Stellantis was pretty good as well. So this is Bitcoin. I'm keeping my eye here. The market's as crazy as it is right now. Seems to be somewhat. There's Royal Caribbean popping a little bit as Goldman Sachs this morning also maintained a buy rating on Royal Caribbean. I will say that we did talk about Royal Caribbean over the weekend. Some friends that the number of free cruises for those of us who cruise a lot are really high right now. Silver's still dropping a bit, 9.45 here. So not really seeing a lot here. Steve, anything you're looking at right now?
Yeah, I'm watching Steve very carefully, and I expect fully that the nervousness based on, remember, the currency markets are the tectonic plates under the financial markets, right?
Yeah.
And there was a heavy ripple, or let's call it a minor earthquake with the dollar yen in particular, and the markets all reflected that. What was that? Gold and silver jumped, dollar dropped, everything has reacted, and now equities in New York, I would expect them to be on the negative side early, but watch out as everybody suddenly says, but nobody intervened. It was just a lot of flapping of lips that went on, and I expect everything to recover by end of day today. So this is buy the dip mentality still in place, and even with the dollar, I expect the dollar to close higher from its opening levels of Asia.
Yeah, and it's interesting now. This is U.S. Rare Earth Company, USAR. For those of you we were following it a little bit, we have talked about rare earth on this show a lot. So if you're not in the rare earth space, that's on you. I moved a lot of money into, as everybody knows, materials and digging that stuff up out of the ground. And here we are up 24% because the United States put an investment into USAR too as well. So, but I'm looking at Intel right now down to the 2.3%. So I think we put the investment in right around $20 or $30 a share. So here we are at 44. So it seems to be whatever the administration starts to put money into. But USAR, there we go, USAR there, up 23.5%, probably some profit taking. But you can see where this sucker jumped. So rare earths. But that's part of this reconfiguration of the world that you're talking about, Steve. Your quantum convergence.
Yeah, another one, Steve. CRML. I mean, apparently they're big into Greenland. Whoa! Yeah. So I would expect that one to be flying as well. But yeah, I mean, the world, the quantum convergence, and I use quantum because quantum computing. Look, close your eyes. The end of the year. Next year, all of a sudden, quantum computing is going to be real. And when we talk about that, you must understand that the magnification to computing power is astronomical. If 1 + 1 = 2 today, in the time frame that I said that, quantum computing would have had that figured out before the words came out of my lips. So Then you've got all the different technologies in bio, in finance, in regular corporate business, in everything we do. The AI agents of the world will just increase productivity. If you look at the productivity gains in the last quarter, they were far and exceeded everybody's estimation. A lot of it becomes foreign to us all because it's like happening up here, but no, it's not. It's now down at our level. Everything that we do is beginning to engage in this field. So all of it is coming together. And I see that third quarter, fourth quarter of this year, you're going to start seeing the real results. And into next year, look out. It's, they're going to tear the cover off the ball.
Yeah, and as we're speaking here, Bitcoin starting to get back to the 88,000 handle here. So we are keeping our eyes tight on Bitcoin for obvious reasons. We think that, yeah, there it is. As some of this money may be coming out of silver, going back into Bitcoin, with something coming out. So you're right, Steve. I think some of this. Over the weekend, another person died in Minnesota. Was killed. Kristi Noem, Department of Homeland Security. President just came out and said she will continue to lead, or the press secretary, Carolyn Leavitt, said she will continue to lead the Department of Homeland Security and has confidence of the Trump White House. What's your thoughts behind all this going on in there in Minnesota?
When you shake a stick in a beehive, be very careful. The bees come flying out. I'm not going to rush to judgment on anything. I'm very sorry at the loss of life, the second life. But, I grew up maybe in a different age. When a policeman or somebody tells me to get out of a car, I get out of a car. I have nothing to worry about. If I have something to worry about, then that's so I get out and I do what they say. They're rounding up illegal immigrants. I don't get the foundation of why the protests are there. Is it
causing trepidation on both sides, the ones that are for this type of action and the ones that are against this type of action?
Yeah, I mean, it's a meeting of the minds, but, Steve, you want to step in front of a freight train and yell and put your hand up and say, stop. It's not going to happen.
But I can say the same thing for protesters saying, hey, you know what? You want a peaceful protest, but you're not listening to me and you're going to arrest me anyway for peaceful protest.
Listen, I'm all in favor of a peaceful protest.
Yeah.
Get out there. And if you've got a beef, get out there and let your beef be heard.
But here's my question about it. And I don't want to get too much into gun control, but he brought a gun to this peaceful protest, right? And that's interesting to me. But yet the NRA is saying, hey, whoa. And the president's saying, well, why'd you bring a gun to a peaceful protest? So there's kind of this mixed knowledge here, right?
That's right, Steve. And, and the problem here is that, it's tough not to get involved in the nitty gritty of politics here, but,
right.
There's a number of documents out that are showing that they are being urged to carry at these protests.
Yeah, well, I will urge them not to carry. I don't think that's right.
Yeah, it does. Steve, I'm sorry.
As somebody who's also a gun owner, I'll tell people, no, that's just stupid, right?
It's stupid. That's my point, yeah. Steve. This is a hard, blow it up to our geopolitical, Ukraine and Russia. It's silly. The loss of life over, over these issues. If you have protests, protest. If you want to get 1 million people, get 1 million people. I myself have been part of peaceful protests in 2008 and again later, over different things. And, where 1 million plus people have gathered. And it's good to express yourself and do that. But it got to maintain the peace and order. The police are there to protect both sides. When they're trying to do a job lawfully, get out of their way. If you don't agree with it, go to your congressman, go to your politicians, and let your beef be known. But the loss of human life is just silly. It doesn't make sense. And
we're just talking about Canada. Hold on a second, Steve. Canada's Prime Minister Carney says review of the USMCA trade deal will be robust. Carney says some of Trump's recent comments should be viewed in context of the USMCA review. Are we going to have a new trade deal?
That is up for negotiation, I believe, in June. It's mandatory per the USMCA. And whether they want to continue it for another 12 years or more, it should be robust. The talk over dollar Canada. I mean, I went long dollar Canada when I heard, Carney's comments with China, but you need to look at it in context.
But Trump has said that Canada is now owned, the once great country of Canada is now owned by China. Like, come on.
Well, Stevie, I think that's wrong. But anybody traveling to the west coast of Canada would probably say, he's right.
Or the west coast of the United States in California, the Chinese people are there too.
But keep in mind one big difference. When Hong Kong was turned over to China, the British Empire, if we want to call it, countries allowed free immigration from Hong Kong into Canada, UK, and other countries that were involved. Yeah. And so the west coast of Canada is huge Chinese ethnicity, which are now part of Canada, of course. But I didn't have a problem with Carney saying he wanted to have a little bit more trade with China. It naturally fits into his country. But if he was talking about
how does it naturally fit? That's one I didn't really understand. What is it that naturally fits to China and in Canada?
They have a huge Chinese immigration in the population of Canada.
So they want the Chinese people that live in Canada want Chinese goods. Is that what you're saying?
Not necessarily want, but he has to assimilate a very large population of French Canadians and now a large population of Chinese Canadians.
Interesting. Okay.
Right. So I think in that context, I can understand a politician, being political and leaning to his constituents. So, I think the United States needs to, back off a little bit. I think that the USMCA negotiations need to be very strict and very balanced.
How would you balance the US? I believe in free trade. I'm sorry, I'm just that guy. I don't think it should be terms of anything. I just free trade. You make a better product, you sell a better product, you make more money on that product. If Canada can't make the product, they have natural gas, they've got oil, they got all the things that we use. We have things that they want, like movies, and we have great trade with them. And in Mexico we have a great trade, but there's going to be imbalances based on what we want to buy. If we don't want Mexican products, we don't buy Mexican products. Why? This should be the biggest free trade zone in the world, right?
It absolutely should be. It absolutely will be. But the problem is that a lot of cheap products from other countries were working their way into Canada and Mexico and then into the United States, creating large imbalances or kind of assisting the imbalance to be even larger.
Right.
Not the direct reason, but that's one of the things. And I think that's the purpose of trying to stop all that. So
your dollar yen now 153.76 here, Steve.
Yep. Yeah. My stop is just below the, where do I have it? My stop is at just below 153.60.
Okay, then I think you're good here. I think we're going to slow down here and I'll probably go right back up. I think probably next.
Yeah, and I, the line in the sand for me is 152.80. If I see that's back to November 7, those were spike lows. I think it's possible on the nervousness, but the market is focusing completely. What you're seeing right now is an unwinding of stale long dollar short yen positions from much higher up. The Dixie right now, we want to watch that real carefully. 97.05 right now. Last week's close, 97.46. My line in the sand, 96.40 is a huge break point. I get worried if we start trading much below a 96.80, a September 18th low. That would be my first warning signal. The narrative in the market is sell America. And, what happens is the herd starts to get behind these moves, and herd mentality begins to make these type of things come to fruition. I just think it's being led in the wrong direction. I'm watching carefully. I am long dollars right now. I do have very tight stops, but I am looking for the knee-jerk reaction back the other way. I may have to wait to re-put that position on if I get stopped out on Wednesday to Thursday and catch the end of the week rally. But that's, it's a very nervous market. The tectonic plates felt the first reverberation of a little earthquake with the Japanese yen. And we want to watch that very carefully. That's why I think gold and silver jumped. If we begin to see them stabilizing, meaning coming off a bit, if we begin to see crypto now going back up, that's a signal the stabilization process is suddenly getting to work, in which case I look to buy dollars on the dip.
And I started buying crypto over the week, last week again, not Bitcoin, believe it or not. I bought Chainlink, as Link's right here, because the New York Stock Exchange is using Link now for its systems now. And over the weekend, I also bought some more down here around 1150. So I'm very happy about that. Not happy with my ZSL. Obviously, my ZSL is really struggling there at the bottoms there. But I think the defensive side of this, I think there's a big gap now that'll probably get filled on ZSL. That gap has probably happened because just they can't keep up with silver right now. I mean, it's just crazy right now. I mean, I just don't understand right now what we're thinking. This is the gold. If you don't know, this is the gold and silver separation in the Philadelphia Exchange, and the separation now we're way out of it. So gold is now, look at that. Gold and silver, man. We haven't seen the Philadelphia gold and silver. Those of you who don't know, that's the main exchange. Gosh, all-time highs there. All-time highs, just nuts.
And I would, add that part of my thesis and why I think everything is going to be a much higher play into the latter part of 2026 and 2027. I call this an asset reflation. I watch the central banks and the monetary authorities very carefully out of the 2008 great financial crisis there, and they reflated. And right now, who is the largest holder of gold in the world? And probably silver. I don't know that part.
India?
United States.
United States. I mean, it's all under the JP Morgan's vaults, right? I mean, in Fort Knox. And
what is the value of the U.S. gold on the books? It's $40-something.
Yeah.
Now, if you take gold at 4,000, 5,000, and you suddenly revalue mark to market the U.S., the largest holder of gold.
That's a great point, Steve. Let's educate people. Why does the United States mark to market have $40 gold on the books?
Yeah, I think it's at $44.20, I believe. Right. Steve, that's just the way they don't want market fluctuations. But if one were to say, let's mark to market, that's $1 trillion, roughly, probably a little more. That's $1 trillion that suddenly, as productivity is increasing in the United States and the debt to GDP ratio is declining, you throw in $1 trillion into your balance sheets, and suddenly the world is no longer talking about the U.S. debt market as being a problem.
Right.
So,
and for those of you who don't know what mark to market is, it's the accounting method that we use in order to kind of value assets in a lot of ways, so that we don't see that fluctuation that Steve was talking about. As if we were to have to sell everything, that's what mark to market means in a lot of ways. It's a way to transparently tell people, hey, this is what we have on the balance sheet. But I think you're right, Steve. I mean, in a lot of ways, $40, 44, 45, even 500 is kind of too low at this point.
Yeah, I don't know what they're going to do. I think it takes an act of Congress. I'm not really sure.
They're really busy lately. They haven't done anything.
You know, I had a little thing on my notes here today to say, you know, when I hear that we may close the government down again over ICE funding, I start to say, you know what? Government just is not working for the people anymore.
Right.
You know, keep the government open, stop with the silliness, and let's get on with, you know, the work at hand. And that's building a stronger country for everybody to participate in. The income disparity in the United States is at all-time highs, and we've got to begin to address this, which I think, you know, credit card debt perhaps held at 10% interest rate for 1 year is a good thing. Other suggestions are all positives in trying to relieve the debt burden, you know, down below. We need to address that. Otherwise, the fragility of this system is going to come splitting apart.
Yeah, I agree. Keys right now, Dow's up 190 points here. NASDAQ's up about 80 points or 0.34%. Interesting enough, the VIX is actually turning green a little bit here too, Steve.
How could it not with the price of gold, silver, the dollar? I mean, everybody's looking left, right, going, which way do I go?
Right.
And of course, in that scenario, and probably for the rest of this quarter, you want to be strategically looking to have a volatility long position, especially given the levels we're at. Now, that doesn't necessarily come to fruition every day, but when you get this bam news that comes out, you know, you'll be up 20%.
Where do you think silver is going?
From
here?
Higher, but probably first I would look for a move back to the 80 level. But, you know,
okay.
There's all sorts of rumors that are driving this market. I'm sure you've seen them over the weekend as well.
Yeah.
About, you know, major short positions needing to be covered. I don't look at any of that I don't give it any credibility whatsoever. If I were buying silver in the last 48 hours on those rumors, you know, I'd be foolish.
Right.
But I do think the industrial demand for silver is quite real. You know, I heard
a demand, and we're hitting a new high now, 110.84 now on silver and the COMEX. I mean, why would a company still want to buy silver at 110?
Well, I think it's speculative at these levels, Steve. I think you've got at least $30 of speculativeness in the price of silver. 80.85 is the buy level. I wouldn't be chasing it up here, but in listening to Elon Musk talk about energy demands while he was in Davos, and he talked specifically about China and the solar electricity that China is capable of generating. And he said the United States, quite simply, could build a 100 by 100 square mile, although he didn't recommend it, in one area. And that would take care of all the energy needs of the United States. So there's no doubt that solar energy is going to be expanded upon in the United States. We don't make a lot of solar panels. It's another area that you're going to watch as a strategic interest in the United States. But if you begin to, and he talked about the ability to harness solar in space being 5 times more efficient, you know, these are things, again, back in my theory of quantum convergence, this is something we want to pay attention to. It's another ingredient. Watch the United States begin to make solar an integral part of this nuclear initiative that we're also going down.
Yeah, agreed. All right.
That's an industrial demand for silver.
And I look at silver in a little bit different in the way that, we have we already have a lot of silver on the books, right? We it's not like we have to go dig it up out of the ground. We've already got a lot of silver. The question I have is how much paper is on the silver we have now?
That's right, Steve. A very good point. And some of my homework I'll do after I leave is I want to find out who is the largest silver holder in the world. If we're the United States is the largest gold, I wouldn't doubt that silver's up there. From time to time, we hear about the Treasury Department and the U.S. Mint not being able to meet the demand for silver coins. But it'd be an interesting homework I'll look into.
I mean, obviously, it is J.P. Morgan. We know that. We know that for a fact. I mean, I think they have, my goodness, 750 million ounces of. And Peru is one of the largest silver reserves as a country. So should we be looking at Peru, or is Peru going to be another country that the United States takes over because they have silver?
Well, I don't think that I wouldn't look at it in that point of view, but I would look at the Trump doctrine, so to say, in that the Western Hemisphere should be safe to the United States. And I would look at Latin America and South America as great investment opportunities in the 5 to 10 year window.
Yeah.
Absolutely.
Yeah. All right, Steve, it's about almost 10 o'clock the hour here. We're going to step off a little bit, and I appreciate that. Steve Flanagan, Monday, Wednesdays, and Fridays joins me, and the new time now, 8:30 a.m. For Howard start time, and I'm looking forward to seeing everybody back here tomorrow.
Take care, Steve.